Good afternoon. Good afternoon. Welcome to another Wall Street Wednesday. This is Professor Milligan. And before I get into it, let me do a couple things. One is these are my opinions, my thoughts, and my ideas. What's going on, Gene? These are my opinions, my thoughts, and my ideas. Before you do anything in this area, make sure that you speak to your financial advisor, your broker, whoever it is that you deal with. Again, then there's risk involved in this. Anything that I do. All right. So with that said, before I get into talking about the individual stocks and commodities, because we're having a great market, I had a question. The question was asked Professor Milligan. It was from Ronnie C. in Jacksonville. And Ronnie's question was, what is earnings season and why should I care? All right. So let me go through this, real quick. Let me go through this. Every major corporation, publicly traded corporation, by law, must announce and release their quarterly earnings and their annual earnings. So basically, it's 4 times a year this is a major event. Now, on Wall Street, one of the things that we do is we value companies. And one of the major things that we use to value companies and determine if the company is doing well, doing poorly, is their earnings. Earnings is nothing more than net income divided by the number of shares outstanding is earnings per share. If you're an investor, you want to know what the company's earnings are, what were projected, and what's going on with them going forward. Now, during earnings season, the reason why I bring this up is these companies report earnings, and it's going to be a catalyst. It can either drive the stock price up or drive the stock price down. During earnings season, if you're on the right side of some of these calls, you have unlimited upside potential. It's amazing how these stocks can run. But the other side is there's always risk. And what the risk is if the corporation misses earnings. All right. In other words, if Wall Street's looking for $1.50 a share and they report something less than that, significantly less, the stock's probably going to come down and get hammered. So again, we use earnings per share like they use location in real estate. Well, if you're an investor and you're trading, it's earnings. All right, with that said, let's get into this. It's been a crazy, busy week since I spoke to you last, and I'm really excited. And I'll tell you, I'm not sure where to start. The commodities market, some of the commodities that we've been talking about for the last 3 weeks are running and continue to run. And the cryptocurrencies, which we had called last week, and we talked about what they were trading at and what we were looking for in the breakout, they also ran. So let me get started with this so I can, I'll read off my recommendations, read off what I like, and we'll get started with this. All right, let me go. I'm going to start out with the futures market. So new recommendation, soybeans. All right, the commercials are aggressively closing out their short position in soybeans. Soybeans are running. They just broke through the 10-day moving average. Both fundamentally and technically, I think that soybeans are a buy here. We also talked about for the last 2 or 3 weeks, stay long oats. All right, well, oats. Oats have formed a bullish right triangle. They've been forming it for the last 2 weeks. I expect it to break a bullish right triangle, and that's what it means. A bullish means I expect it to break out to the upside, and I'm expecting a major move in oats. All right, other new recommendations. This one's not new, I'm just repeating. Stay short cocoa. We put cocoa out as a short last week. Cocoa is actually moving down. It's not trading well at all. Stay short if you're short. You can actually add to position right now if you want to, but again, short cocoa. We've also been short OJ for the last 4 weeks. Stay short. All right, we've been short OJ. Stay short. OJ also is under pressure. It's coming down. Let's see what else. Heating oil. As you guys know, crude oil today went to $84 a barrel, which is basically a near-term high. We haven't been here in a while. Heating oil also is actually on a run, continues to run. So again, and we've been talking about heating oil for the last 3-4 weeks. So if you're long heating oil, stay long. If you're long heating oil, stay long. Now these are new. I've got a couple of new ones up here. And The new ones are actually in the currency. Been tracking the dollar. The dollar is coming to weakness. Short the US dollar. Short it. On the upside, new recommendations. Go long the Swiss franc. Go long the euro. Go long the Australian dollar. The Australian dollar's already started to run. So let me repeat this. This is a new one. So I actually got 4 new ones. One, again, go long soybeans. The commercials are aggressively closing out their short position. This is the smallest short position the commercials have had in the last year and a half. All right, that means they're closing this thing out. The other thing is with the commercials. The other ones are short soybeans, and then new recommendation: short the U.S. dollar. Short the dollar. Yeah, I said it. Short the dollar. Go long the Swiss franc. Go long the euro. I'm talking about the currency. Or go long the Australian dollar. All right, those are my commodities futures accounts. Those are what I would do. Those are what I'm doing. Some of them I'm doing, some of them I'm not, but that's what I would do. That's what I'm seeing. Now, let's move on to the cryptocurrencies. We talked about these for the last couple of weeks. I had told you that, and I'm looking at it now. I'm looking at my notes from last week, just so you know. And my notes from last week said Bitcoin at 5-month high, near the $60,000 number. At the $60,000 should take out the old high. That's what I told you last week. Well, this week, guess what? Bitcoin went to a new high. You got support now at 62,500, 62,500. I don't know how high it goes, but it's running. Now, there's a number of reasons why it could be running. Could be because of this new ETF that they have. But the bottom line is Bitcoin is running. So stay long if you're long, go long if you're long, get long. It's trading really well. The other one that's trading well, which we talked about, was Ethereum. Now, Ethereum hasn't gone to an old high, but Ethereum broke out. And last week, what did we say? Ethereum trading range, look for it to go to 3,800 to 4,000, which is what it did. So Ethereum right now broke out. It's trading above the 4,000 we had talked about last week and should challenge the old high at 43.84. So I'm expecting the cryptocurrency, if Ethereum, to challenge that old high at 43.84. Now, the other ones, well, let me jump to this one first. You guys had asked me about SHIB. I guess it's SHIB. I don't know what the name is. I know that you guys gave me this cryptocurrency. I've been tracking it since you gave it to me, so I just posted it what it is. And I saw in the report, I think what the guys say now, if you'd invested $1,000 in SHIB, I guess it's SHIB, I don't know. A year ago, that investment now is worth, $2 million or some crazy number he said? Crazy number. But anyway, here's the deal. I told you this last week, and it's continuing to form a bullish right triangle. Right triangles are very, very bullish. Consolidation, and it's forming this right triangle on low volume, which is what you want to see. Low volume means that whoever's in there is not selling now. So no one's really buying, no one's selling. So it's drifting off of no volume, which is really good. It's holding up. I expect it to break out of this right triangle, and I expect it to go a lot higher. So again, I'm bullish on the breakout, SHIB. Now, what else? I always talk about Ripple. Ripple's trading sideways in the range between $1.08 and $1.17. $1.08 and $1.17. Tons of work to get through that old high at $1.96. So I would basically sit on the sidelines with Ripple. You know my philosophy: buy high, sell higher. So what I'm seeing right now with Ripple, I wouldn't go near it. Dogecoin, you know how I feel about Doji. So I'm going to give you the breakdown on Doji. I can't think of any reason why to take any of your good hard-earned money and go spend it on Doji. I just don't. So, but here's the deal. Doji, near-term resistance at 26 cents. This is the third time it's hit 26 cents and not gone through. Triple top. Usually when you have a double top, things reverse and go down. So we had a triple top on Doji. It has not gone through. The cryptos are bullish, but I'm not sure what's going on with Doji. If it gets through that 26 cents range, you'll be in the old range between 26 cents and 30 cents. But here's the deal with Doji. The old high is 74 cents. You're at 25, you're at 33% of the old high. You know my philosophy. I'm going to say it again. Buy high, sell higher. Wouldn't touch Doji. All right. Those are all of the cryptocurrencies. Those are the cryptocurrencies. Now, on the stock side, I'm going to say something that you probably have not heard me say before. A number of these stocks are running to new highs or close to new highs that we've been following. My recommendation is to adjust your stop loss orders. I am bullish the market. I think everything's going to be fine. I'm not running for the hills. I don't think we're headed for a recession, major contraction yet. Keyword was yet. But the bottom line is these stocks are trading extremely well. Again, I'm not trying to be redundant, but I guess I have to be. Last week, I told you about the S&P 500. I told you S&P was sitting right at near-term support. I told you I thought it was going to break out to the upside. There was some minor resistance, but I thought that I'm at 44.20 on the S&P, but I thought it would actually take, by the way, I thought it would take through that, and it did on the S&P 500. So again, I'm not surprised at the move that we had in the marketplace. I'm not surprised at all. And again, I think we're fine. And that's the reason why I started out this conversation today talking about the yield curve. All right? Let's say it again. In my lifetime, every major recession we've had has been preceded by an inverted yield curve, 12 to 18 months before it happened. The last inverted yield curve we had was back in 2019. And a lot of people don't realize this, but in March 2020, when the market sold off, we actually were in a recession. It was the shortest recession in U.S. history. But we were in a recession for those 2 months between March and April. All right? That's where we were at. So all I'm saying to you guys is that I don't see it. I think, as which I told you, I think backing and filling is healthy for the market. I think trading sideways, consolidation is healthy. I think this near-term sell-off was healthy. All right, nothing goes straight up, nothing goes straight down. So these pullbacks and consolidations are a chance for the market to catch its breath and then proceed to go higher. So I'm still bullish. I'm staying bullish. Now, I don't have any stock charts for you today. All right, pretty much everything that we talked about is doing well. As you guys know, I don't know when it's coming out, but sometime today, Tesla's coming out with the number in terms of earnings per share. We are in earnings season. Now, here's what's interesting about Tesla. Tesla went to an all-time high today, ahead of the earnings. Now, typically, you know how I am. I get really bullish about a security that's running ahead of earnings announcements. My challenge is this, though, and this is my challenge. I think Tesla is so overvalued, I just can't pull the trigger. I just can't do it. Tesla right now, understand this, Tesla's market cap is the whole entire auto industry. Tesla's market cap is larger than the whole entire auto industry. All right, really, that's it. All right, let me clear this up. Andy, what I'm saying is I don't have any stocks that I looked at to go over today. So all I'm saying to you guys is if you have a stock that you want me to talk about or look at, put it up and I'll take a look at it. Everything is pretty much trading well. I don't have anything I think that's not trading well. I'm just looking at my notes. Upstart, Affirm, Hubs, Boot, Netflix. Those are the ones I looked at that we've been talking about for the last couple of weeks. And those are the ones that I would raise my stop. They're all trading really well. Now, Upstart kind of backed off a little bit. AFRM, Affirm backed off. But Hubs, Boot, Netflix is all-time high. In Mode, they're all trading extremely well. So what I would say is, again, I'm saying I would just raise my stops on those. And the reason why I'm raising my stops on those is that it's not so much that I don't think they're trading well. I'm raising my stop because I want to make sure that you guys, if you get out with a profit, you traders. All right? I don't want to see you let this thing pull all the way back again. You weathered out the storm. I don't think that it's going back down. I would just raise my stops now to lock in some profit. Andy, if you have any stocks you want me to look at, I'll feel free. Now, the other side, too, is some of the stocks that we talked about in the past on the short side. They're bouncing a little bit. Content, which is Wish. Had a run today. It's up, and it's up off big volume. The other one I want to let me just post that first. So I'm looking at Wish right now. Again, Content Logic, WISH. Stock ran today. For the last 2 days, let's see. On Tuesday, the stock opened up, looks like at about $5, closed at 532, and then today it ran and closed at 609, as high as 627, 628. So they had a nice major move today. I'm not sure why. Volume was behind it. If you're short, and if you shorted where we told you to short it at, where I told you it was a short, you got no issues here. I'm just looking at it. You got no issues. This stock is just, again, I don't know why it's running. And I think the reason why it might be running is because of the possible merger or the announced merger between Pinterest and PayPal. Now, I want to talk about that real quick. Here's the deal. PayPal has made an offer to buy Pinterest. Let me tell you what Wall Street feels about this. Pinterest stock went up, should have gone up because they had an offer to buy it. But PayPal stock dropped off the news and it went down. In fact, let me give you the numbers on PayPal. PYPL. Just type it in the symbol, guys. PYPL, PayPal. All right. So here's the deal with PayPal. PayPal today opened up at, give you some numbers here, opened up at 273, went as low as 253, closed at 258. All right. What that's telling, of heavy volume, what that's telling you is that Wall Street does not like the acquisition. All right. Wall Street does not think it's going to be a good acquisition. I'm just telling you what the number, what's going on here. So anytime you see the acquiring company stock drop when they're trying to acquire someone, they make an offer, what it tells you is that Wall Street does not like the acquisition. They're trying to figure it out. As I watch the Financial Channel, they're like, we're trying to figure out what's the fit here. What's the fit? And think about what's the fit between Pinterest and PayPal. I can't find this fit. I don't know if it's a vertical integration. I don't know if it's not. I can't find the fit, and that's what Wall Street's also saying. All right. Let me do a couple things. Lance, I promise I'm going to get to that because I've been looking at that too. All right. Somebody's asking about Archer Daniels Midland, AMD. Haven't looked at AMD in a while. It's been a while. Wow, look at that. All right, so let me just say a couple things real quick. I'm going back to I just got to go back. I always go back. Just got to go back. All right, that's what I want to see. All right, cool. All right, AMD. At an all-time, right near an all-time high. Wow, 99, 116. Hold on a second, let's see. Yeah, I thought so. All right. AMD just broke out of an old trading range. They broke out of an old trading range right, I'll give you exactly. It was back in July. And since then, the stock's been in a trading range between 99 and 116, got as high as 122, but 116 to where it is now. So it's been in a trading range. It's still in that trading range. Basically between 99 and the old high. Let me switch this now. Hold on a second. Let me come look at it again. AMD. Yeah. All right. For those of you in technical analysis, you'll understand what I'm saying. Stock broke out of had some minor resistance about 112. It broke through that. It's trading sideways between 115 and 116, right around there. Here's what I'd like to see, just so you know. One, I'd like to see the stock challenge the old high. And it reports earnings. It looks like, let's see. No, that's not the date. That's old earnings. Come on, what's the new stuff? Let's see. Looks like it's report. It doesn't have a date yet. Sometime here in September, it's supposed to report. It doesn't make a bit of sense here. All right. So September quarter came. I'm not sure when it reports. That's just the number. Looks like, no, it didn't report. So I'm not sure what's going on with the earnings. But the thing I'm looking at here is I'd like to see this thing trade up to the old high and maybe even take it out and then trade sideways and do some consolidation. That's what I like to see. As you guys know, it's made a nice run here, but we're at the old high. Could have a little, I like to see it catch its breath. It's done a lot of work over the last basically week, 2 weeks to get where it is now. Let it catch its breath. The other thing too about it, the last part of these runs, the end part of these runs have been on light volume. So two things. One is I like to see heavy volume. In fact, if you look at the chart, back in July, when the stock basically ran from 92 to 120, it did it on tremendous volume, and it ran for 3, 4, 5 days. So I'd like to see that kind of volume again. I like to see that type of move. So right now, I'd like to see it basically consolidate and then take everything out. AMD. The other side too is, for those of you who don't understand this, there is as you guys know, there's a chip shortage. There's a chip shortage. All right, global chip shortage, just that simple. And basically on the fact that we have a global chip shortage, all the chip manufacturers should see an increase in their stock price because they should see an increase in demand for their product. Basically what you're seeing is demand still there, but they don't have it. So it's an actual positive thing for the chips manufacturers. All right. Lance, let me see. You said in the crypto ETF, BITO. Okay, everyone knows that Lance has typed it up. I'm going to type it up again just so you make sure you understand. There's a new ETF, which is the cryptocurrency Bitcoin. All right, and there it is. I just put it in. I've been watching the trade. I think today ended up closing at 40. I'm not sure where it is. So let me just, before I even say that. Yeah, it ended up closing at 43, off a high of 44. All right, so it's run over the last 2 days. The first day was actually trading, which was yesterday, opened up at $40.83, went down a little bit, and then ran, as you see, like I said, as high as 44 today, closed at 43.28. All right, it's an ETF based upon Bitcoin. So Lance is writing. He read the prospectus and noticed that it was holding Bitcoin futures, not BTC itself, and has a 95%, a 0.95%, a 1%, 95 basis point management fee as well. What are your thoughts on that? The management fee seems reasonable, Lance, at 95 basis points, which is basically 1%, especially for an aggressive. You got to consider this aggressive. Some of your more aggressive funds might have a management fee as high as 2% or 200 basis points. So I don't think this is out of whack. The fact that they're buying the futures, I track the futures. So when you hear me give my reports in terms of what I'm doing on the cryptos, I'm tracking the futures on the cryptos. So I try and track the futures whenever I possibly can, just because you can trade the futures. I don't have a problem with that whatsoever, none whatsoever. So I'm actually watching this. I'm trying to decide if I want to actually buy some, just so you know where I'm at. And the reason being is, I do think the cryptos are going to be here for a while. I do think the cryptos are going to, some of them are going to work. So let me back up. For those of you who are been around like I have, you saw the dot-com bubble in the burst. You see all these bubbles. You saw the oil bubble. You see these bubbles. You see these new securities come to marketplace. We had the same conversation basically, 2 years ago about the special PAC acquisition corp, the SPACs. We had the same kind of conversation. New product coming to the market, high demand. Here's the challenge. Not all of these cryptocurrencies are going to make the turn. Not all these cryptocurrencies are going to be around in 2, 3, 5 years. If you were around, a lot of the dot-com stocks are gone. Either they were acquired or they just flat went out of business because their business model and what they were doing just didn't make sense. Well, we're going to have the same thing with the cryptocurrencies. No question about it. So the question really becomes, which ones will be around? Which ones will make the turns? Which ones do you want to own? All right. So with that said, I think Bitcoin will be around. All right. I think Bitcoin will make the turn. Therefore, if you want to play this and you're not sure how to trade it, how to play it, you can buy the BITO. All right, the ETF. They'll do all the trading for you, and basically, they'll buy the futures contract for you, and basically they'll let this thing run. That's what I did. Now, the thing I'm looking at is, and you'll laugh, I'm looking at if I'm correct, and if we're correct, this BITO, the ProShare Bitcoin strategy, should mirror the Bitcoin's technical chart. And what that means is, if that's the case, I'll be able to actually track the BITO and determine when I want to buy, when I want to sell, basically just based on the technicals, the charts. Now, I know I'm saying a lot, and I'm going to say it again. There are no fundamentals with the cryptocurrencies. There are no fundamentals with the cryptocurrencies. There might be over time. Hopefully they'll get some. But right now it's based on supply and demand. Think about it. Why does this thing run? Why Bitcoin run recently? It ran because one of these things, this ETF is coming to market. And I believe another couple of brokerage firms actually said that they will signed up so they can actually have individuals buy them through the brokerage firm. So what's happening with a lot of these cryptocurrencies? They're becoming mainstream. I mean, that's the best way to put it. All right, what's going on, Twin? How are you? SoFi. I haven't looked at SoFi in a long time. SoFi. All right, bear with me a second. I just need to get a little history here. That's what I thought. Yeah, that's what I thought. All right. All right. All right. I'm looking at SoFi. Let me type in the symbol. So I'm looking at SoFi right now. SoFi IPO'd, it looks like, back in November 2020. Stock went from basically $10 a share, ran to $28 a share. In about what? Let's see. That was November, into December. So by the 1st of February, this thing had traded up to $28 a share. And then from there, backed and filled and dropped to about 15. Now here's what becomes interesting. In June, it tried to push back to that old high. It only got to 24 and it failed. It came back and tested the same support level around 14. Interesting. Same support level it tested. It tested again at 14. And right now, the high is 21. So here's my comment. One, I would not trade this stock till it got through the 24 and through the 28. All right? Would not touch it. Just because the reason why I say that is you've got stock hanging overhead near term, between 22 and 24, and you got more stock hanging out there between 23 and 28. So it needs to work through that stock. Once it works through that stock, if it things takes out 28, I'd be a buyer on the move through 28, but I would not buy it before it moved through 28. You guys know how I feel. I'm not a big believer in, trying to predict where the market's going, where stock's going. I let it tell me what to do. So when this stock goes through 28, I'd be a buyer on 28. Again, I know I said it several times already today, but I'm saying it again. Your goal is to buy high and sell higher. Buy high and sell higher. All right, let me see. I'm looking through it. Anything else? I'm not sure the Tesla report. You guys can let me know. Tractor Supply also is due to report. TSO, Tractor Supply is one of the ones we talked about to do the report. It had backed and filled, and as you see, it challenged that old high. It's basically right below its near-term trading range between 202 and the old high 212. It pushed back through there ahead of earnings. I'm pretty sure earnings are due. I'm not sure. Oh, that's why. Bear with me a second. I'm looking at the wrong thing. That's why I couldn't get it. So bear with me a second. All right, bear with me a second. That's what I wanted to see. There you go. All right, near term on Tractor Supply. So basically, had to hit the old high in late September. It's pulled all the way back to the bottom of the trading range. And now you've moved back into the old trading range. I said between 202 and the old high. Earnings are due October 21st. October 21st earnings. All right. And what was the other one I looked at that I could not find the earnings? God, I'm a bad memory. Oh, well. But that's Tractor Supply. I'm just looking at the chart. I would not buy it ahead of earnings. I wouldn't. I wouldn't take the shot. I think the number's going to be good, but I'd wait till at the earnings. There's no reason to rush. There's no reason to speculate on this. I'd wait for the earnings. Same thing I had said about Tesla. I'd wait for the number to come out. Has anyone, I'm going to see right now, I'm going to look for Tesla right now, see if Tesla reported earnings. Bear with me a second, I'm logging in. Here, Tesla. Tesla, TSLA. So let's see. Aftermarket trading, Tesla's down $7, which means it's non-event. I don't know if earnings have come out yet. I'm looking at the news. I'm trying to find the news. Bear with me a second. You guys can tell me too. I don't think Tesla's reported yet, huh? Bear with me a second. I don't think I'm looking for earnings. Oh, I want to go to news. Tesla has not reported yet. Oh no, they did. Take that back. So again, earnings. Wow, this is pretty crazy. It says, I'm literally reading. Tesla has released its financial results for the third quarter by posting an update on its investors relations website. So they didn't post it to the market. They posted on their website. Wow. And I don't feel like looking down. I know the stock's off, so the numbers probably came in either in line or a little flat. Probably in line. Pretty much what investors are expecting. As I told you guys, I'm not a fan of trading Tesla. Just saying. All right. Tesla beat, let's see, $1.86 earnings per share versus expected $1.49. So here's the deal. Thank you, Lance. If Tesla beat on the number, $1.49 was expected, it came in at $1.86, but the stock is actually down in aftermarket trading, down $6. What it tells you is that it's a non-event. The number, they might have beat it, but it's not what Wall Street was expecting. So it's right in line, hasn't sold off. It's probably good to have earnings positive, but stock has not sold off. It hasn't run either. Very interesting position to be in trading Tesla. I'm looking at the chart now. Interesting. I'd have to read listen to the conference call or read it, but here's the deal. The stock broke out from $800. $800, the stock went on a pure straight run from $800 to $875. If this number doesn't hold up, if this market doesn't hold that number up, the stock could easily pull back to $800. The trading range was between $775 and $800 before it broke out. So the deal is, if it doesn't hold this number and the news is not good, your next stop on the downside would be back to that 800 level. All right. If they beat the number, if the market likes the number and they're looking at the financials and listening to the conference call, you got a shot it might stay here. But I don't think it's going to run off of that number. I could be wrong. We'll soon see. All right. Let me see. Any other stocks you guys want to talk about? Anything else you want to talk about? I wrote this down. Bear with me a second. No, I didn't. I thought I wrote it down. I didn't write it down. All right. I didn't write it down, so I apologize. I thought I wrote it down. I didn't write it down. All right. I'm looking through. I don't see any other questions. I don't have, I don't see any more questions. I guess that's what I'm going to say. I don't see anybody asking questions. And I've already discussed what I want to discuss in terms of the yield curve. Again, yield curve. And we're in earnings season, guys. This is earnings season. And you have a prime example of what's going on. Tesla ran ahead of the number, and it didn't hold. We'll see what goes on from here. Thoughts on Facebook? I don't know. And what I mean by that is, I can tell you what's on the chart, but I have no idea what's going to come of what's going on with Facebook in terms of the politics behind it, the problem that they're having with the whistleblower. So I don't know what to make of that. I'll look at the chart. I can tell you what's going on the chart, but You know, one thing that's interesting about the chart is Facebook is sold off for the last, basically, was that month and a half, and this month is the first month since the week of September 13th that the stock actually has had an up week. All right, so let me go to a daily chart. Ooh. All right, Facebook right now at $340 is sitting right at a support level. This support level goes back to, hold on a second, let me make my screen a little bigger. This support level goes back to June 2021, June this year. So there's support at right where it's at, this $340 level. It hit there once, broke through, rallied, came back, tested it, rallied, and then back here in September, it came back, tested it again, didn't hold, broke down, and now it's rallied back to that support level. So here's the deal. At 340, you're right at support. If it breaks 340, you're back down to that, could be possibly as low as 320. That's in that near-term range. If it can keep going higher, if it can fight, you'll be in the trading range basically between 340 and 360. Yeah, 360. All right. And if it gets through that range, you got more work between 360 and 366. It's a lot of work in this stock. A lot of work. I don't think it gets through that in one day, but it can get through that. We have earnings coming up. You have earnings coming out when? Earnings are due out October 25th. So you got earnings around the corner. Earnings might be enough to propel this. Might be enough, but we'll see from there. Amazon, AMZN. Oh, before I go to Amazon, Microsoft, Softy. I talked about Microsoft a couple of weeks ago. Microsoft was at that old high of 305. It hit that number and it was in trading range between 305 and 300. Then it broke down and got as low as 280. And now it's rallied right back and it's at an all-time high. And earnings are due out on Microsoft on I don't have a date. Doesn't have the day. It just has the period. So it's due out sometime this month. I don't know when. I have to go look it up. Hold on. I can get over here. Microsoft. Softy. So I would highly recommend you take a look at Softy. Let's see. Earnings for Softy are due. Let's see. Where's the date? Where's the date? Come on, give me a date. I don't see a date. I don't see a date yet. I don't want that. I want the, unconfirmed. The 26th of October. October 26th. Oh, thank you. Somebody else had put it. Thank you. So yeah, I've liked Amazon. I've liked Microsoft for the past. We talked about it a couple of weeks ago. It's back up here. It broke through that. It broke through that near-term resistance at 305 and touched close to 310 today, closing at 307. Again, this one I think you can actually buy ahead of the number. I don't think it's run yet. I think the number's going to be good. But again, that's just my opinion. The other one that somebody just asked me about was besides Microsoft. Oh, Amazon. AMZN. Thank you. Come on, Mike. Wake up. All right, let me get a little more picture here. Whoa. All right, let me switch this to a weekly chart. Wow. Wow. All right, I'm on a weekly chart. Hold on a second. I got to put some lines in here. Check my time. I got to put some lines in. I'll tell you why in a minute. Yeah, look at that. All right. Amazon has been in a trading range going back to June of 2020, after it had a nice little run, it's in a trading range between 3,000 and 3,400. It broke through that trading range for a couple of weeks in July, end of June, July, and then fell right back into that old trading range. Right now, today, you closed right at the top of resistance. If you can get through 34.15, if you can get through 34.15, hold on, let me switch to a daily chart. Switch to a daily. AMZN. Yeah, buddy. Yeah, buddy. All right. So that number should be raised. So it's in a trading range between, yeah, right about there, 3,000 and 3,500. It broke out and went as high as 38, almost 38, 3,700. And then it gapped down on earnings. It gapped down on earnings on July 29th. Gapped down on earnings and then traded basically back up to that old resistance level at 350, at 3,500. And it's sitting here. Earnings are due out in a couple of weeks. Not a couple of weeks. Let's see here. I don't have the date here yet. Oh, October 28th, earnings are due out this month. The way the stock is trading, I would be patient with it. I wouldn't jump on this. And the scary part is you're right in the middle of a trading range. There's a near-term trading range between 3,200 and 3,500, and you're sitting here at 3,400. So I wouldn't buy it here. And the reason I wouldn't buy it here is because if it doesn't get through this 3,400, 3,500 range, it could come back to 3,200, which is support level, near-term. Yeah, near-term support. So I would be patient with it. I would wait. Now, one of the things I'm going to say to you guys is, and I say this all the time, is being patient doesn't mean, you can't get stuck on price. And what I mean by that is you can't say, well, Professor Milligan, we could have brought the stock at 3,400. You had us wait till 3,600. Why'd you have us wait? And the reason why I have you wait is because the best analogy I can give you is I'm looking to have as many ducks in a row before I buy a stock or short it. All right. And the other thing that I've seen over the years is when stocks break through and go to their high, there's no resistance. This stock has resistance to it. So, not trying to be funny, you got a whole group of investors. I mean, look at this. You got a whole group of investors who brought this stock back in July, end of July, ahead of the number, only to see the stock close it the next day down at 3,300. All right, so that's the kind of gap you have. It came back and filled the gap, but now it's failing again. It's trying to rally. So my point in saying this is that when you buy these kind of stocks, when you're buying stocks in general, you want the path of least resistance. All right, that's what you want. I'm not saying you want all of Wall Street to agree with you. All I'm saying is that path of least resistance. And right now, if Amazon, and it will, don't get me wrong, great company. So it's not a question of if, it's a question of when. So when Amazon gets through that resistance level and tests the old high, that's when I'd buy it. It could trade sideways. As you saw, if this thing traded sideways between 3,000 and 3,500, it traded sideways for, I'm going back. It traded sideways that way since basically over a year ago. So if you were in Amazon over a year ago, you basically watch the thing go up and down, trade sideways. And all I'm saying to you is that I would wait. All right, that's what I'm saying. I would wait. All right, I don't see any more questions. I save all my recordings. And I'm here to tell you something. I'm going to do a piece on the inverted yield curve. I'm going to do a piece on that. And when I get that piece done, because I've been talking to my students, at the university, and I've been lecturing on this. And again, I can't emphasize enough, in my lifetime, every recession. And by the way, in these recessions, the S&P also takes a major hit. In these recessions, and the S&P takes a major hit, they've all been preceded by an inverted yield curve. All right? All I'm saying, guys, it's a leading indicator. All right? If you know something that's going to happen 12, 18 months before it happens, can you take advantage of that? That's what it does. Now, I've heard arguments recently that the inverted yield curve is not as accurate Inverted yield curve is different. Inverted yield curve this and that. I'm going to say one thing to you. The inverted yield curve has predicted, indicated every recession in my lifetime. So guess what? Inverted yield curve is batting 1,000. Wall Street analysts that say it's not working, batting 0. So I'm going to keep going with this until it doesn't work. That's how I always do. I'll keep using something till it doesn't work. All right, I don't see any more questions. Mr. Cornfield, you still there? You only gave me one stock today. Mr. Cornfield didn't give me any stocks. Mr. Cornfield must be at work. All right, I am about... Hey, Stephen, what's going on, buddy? I just saw you there. Just saw your name. All right, so I don't see any more questions. I'm flipping through. Oh, let's see. Coach Walsh, is this crazy to invest in XPS even if you plan to hold for 20 years? All right, so yes, SPXL. All right, couple things here, Coach Walsh. Me personally, I think I told you guys, my retirement account puts money in every month into the S&P 500. That's what I do. So to answer your question, yeah. The only thing that I hesitate on what you have in front of me, you have the levered SPY. All right, this one's levered. I think it's levered 3 times. It's the only thing I back off on that is that means, no, I'm not saying you shouldn't do it. I'm saying the only thing makes you back off on this is it's levered 3 times, which means your moves to the upside and your moves to the downside are going to be much bigger than the S&P itself. If you can live with that, no problem. If you're a long-term holder, just buy it, dude. Just keep buying, and keep buying. What you're doing is you're betting on the U.S. economy. Anytime you want to bet on the U.S. economy, just go out and buy the S&P 500. And the one thing I'll say to you, and I say it all the time, is I'll bet on the people here in the United States in terms of the U.S. economy. We got some really bright people in the markets, and we have some really bright economists. Yeah, we do. We have some really bright people. They figure stuff out. All right. And as you guys know, the Fed is really pushing to keep the market up. It's one of the controversies we have right now. The Fed's doing whatever it takes to keep the market afloat. That's the big problem with inflation. So, in terms of what the Fed's doing, so I think you're okay buying it. I'd buy it. I'm telling you right now, I buy it. All right. Again, you're long term. Buy it, throw it in the drawer, and keep adding to it. By the way, keep adding to it. By the way, before I forget, I did actually make a purchase. I purchased this when it went through the old high, which was, I think, at 92. So I did buy some of that. Applover.com. Applover.com. But anyway, Coach Walsh, I agree. I think it's going to do well, Coach Walsh, long term. I would buy it long term. And the thing I always say to people is, so let me do it this way. SPX. All right. Let me go to a monthly chart. And bear with me a second. It's going to take me a minute to get to what I want to do, what I want to say to you. And then let me go back. So I'm going back to, let's see, 20 years, so 2000. In the year 2000, let's take the high. The high in the S&P in 2000 was on the SPY in 2000 was 1,500. Today it's at 4,500. If you're a long-term investor, follow me now, what I'm about to say. If you're buying this long-term and you brought it at 1,500, or you brought it at 1,600, or you brought it at 1,200, in the grand scheme of things, it's not making a difference. Long-term, it's not going to make a difference. All right, you're talking about a couple of basis points here and there. The bulk of the move is not, it's not where you purchase that. For long-term investing, now if you're short-term day trading, of course. But if you're a long-term investor, don't get hung up on price. If you're a long-term investor, don't get hung up on price, because the bottom line is, if you bought a stock at $10 a share and you think the stock's on its way to $500, do you care? I mean, seriously, if you bought it at 10 and you say, wow, I paid too much for it. I bought it at 10. And had I waited a week, the stock dropped down to $8 a share. I could have bought it at 8. Do you think that on a $500 stock that you own at $10 a share, the difference between buying it at $10 and $8 is going to make a difference? I don't think it's going to make a difference. So all I'm saying to you guys is, don't get hung up on this price stuff, especially if you're not day trading. If you're short-term trading, day trading, of course. But if you're a long-term investor, don't get hung up on that. Really don't. Find quality companies. Well, I'll do that another time. We're at a minute 51, so I can't. I mean, an hour 50. I mean, 151 time-wise. So I've been on for 51 minutes. I got to save these, so I can't go much further than this. But I hope, Mr. Walsh, Coach Walsh, you understand what I'm saying. You're long-term. I read a piece the other day that said, had you brought Domino's Pizza with $1,000, had you invested $1,000 in Domino's Pizza 10 years ago, that investment would be worth 19 grand. And by the way, Domino's Pizza, just so you know, and I know some of my former students are on here, DPZ. I'm not sure which one of you guys recommended it, but one of my former students put that into the school portfolio. I'm looking at the chart on this thing. It's unbelievable. So 10 years ago, bear with me a second. I'm pulling up. 10 years ago, so that was year 2000. Well, I'm 10 years ago, sorry. 2010. So 2010, I'm going to give you the high in 2010. The high in 2010 was $14 a share. Let's say 15. Stock today closed at $458. All right? That's what long-term investing does. All right? So, and yeah, guess what? This includes this is 2010. So it includes everything that happened in everything that happened in 2020 with the pullbacks and the consolidation and everything else. It includes all that. All right? So all I'm saying to you guys is, when you find something that you like that makes sense long-term, hold it and let it work for you. Big moves take time. And when I say big moves, I'm not talking about 10%, 20%. I'm not even talking about 100%. Big moves take time. 3, 4, 500% more takes time. It doesn't happen overnight. All right. I think I'm done. I don't see any more questions. My pleasure, Coach Walsh. And again, guys, just a quick reminder, feel free at any time to email or DM me questions or issues or concerns. Hey, Professor Milligan, what about this? What about that? All right, I'm out. Have a blessed week. Make plenty of money. Make plenty of money. It's out there for you. Be patient with it, but go make it. And I will talk to you next Wednesday. Have a blessed one. Professor Milligan out.